Thanks for being here. Today we are going to cover chart of accounts, dimensions, financial reporting, and consolidations. And really the goal of this session is for you to walk away knowing all of the options and things to think about with really planning your financial setup all the way from chart of accounts to transaction entry to consolidations. And we're going to cover consolidations in AX as well as in Management Reporter. And we're going to talk about just all the different options so that you can truly make the best decision for your company. So that's really what we're going to cover. I'll start out with talking about chart of accounts and dimensions. I'll cover advanced rules and account structures. Heidi will then come up and talk about consolidations in AX 2012. And then Jill will wrap up the session this afternoon talking about Management Reporter consolidations so that hopefully you have a real good end-to-end perspective when you leave here. So to kind of set the stage for our session today, we're going to use an example here where we have corporate structure and reporting requirements. So our first scenario, as you can see, we have a Contoso corporate, which is located in France up at the top, running on a AX instance number 1. And then rolling into Contoso corporate, we have a UK office, a German office, Japan, and North America, which also has different roll-ups. And you can see we have different instances of AX. We've got a non-dynamics RP in this situation. We've got a unique chart of accounts. We've got some corporate and statutory reporting requirements, and then different levels of consolidations. Okay, so we are going to cover all of this today through a variety of demos, starting with the financial setup. So the first topic is when you're first planning out your company, and that is your chart of accounts. So the chart of accounts for an AX 2012 it's a shared setup. We'll talk about how financial dimensions will get incorporated. And then we'll talk about creating the different combinations that are valid, because you probably don't need to track vendor on a sale potentially. So we want to talk about some of the different special rules and how you can set that up, and then what you should consider for reporting and consolidation. So to set the stage for the first piece, which is the chart of accounts, and I'm going to focus on Contoso North America over there on the right, which you can see highlighted. And Contoso North America, I have a standardized chart of accounts. However, we do require that my business or my balance sheet is balanced by business unit, so that's something we need to consider when doing our setup. We require vendor and cost center to be tracked on expenses only. Okay, so we certainly don't need to track those on anything else but expenses. Everything else from a revenue and expense perspective requires business unit and department. And then we also like to analyze our business by region. Okay, so that's kind of the key points of my company that I need to think about when doing my setup. So let's start with the chart of account piece. The chart of accounts in AX 2012 contains a list of main accounts. It can be shared across ledgers. So we've heard up to like 500 companies and throughout our sessions this week. You certainly don't need to have 500 chart of accounts that you need to set up and maintain. AX 2012 does have a shared setup. There are specific properties that you can override. So maybe you have a specific account that not every company uses, but it's still you want to include that in your standardized setup. There are certain overrides such as suspended and active from and active to that you can set at a company level. We also want to talk about account categories because they really will help drive analysis and reporting. I'll probably hammer on that because you'll get a lot of easy reports. You'll get 16 default reports out of the box if you use account categories. So we really want to focus on making sure you put that into a best practice when setting up your chart. And then last, we'll talk just briefly about templates and how they can help ease the setup and then any mass changes that you need to make, which will come into play later on when Jill talks about currency. So, all right, so the first thing, looks like my slide got screwed up. The first area that's supposed to be highlighted is the North America uses a standardized setup of main accounts. So we'll talk briefly, do a demo of the chart of accounts. Okay, so I'm in a specific company right now in AX 2012 in the general ledger area. And over on the right in the setup, you'll see there is a chart of accounts section. And this section is really going to help you step through all the things that you need to do to create your chart of accounts. So if I click on chart of accounts, you'll see that in this demo company, I've got 8 different chart of accounts set up. So not, in my example, North America is using a standard or a shared one, but you can see it maybe for my Brazil location or Chinese location, I do have a separate chart of accounts for those companies. Okay. So to create a new chart of accounts, it's as easy as just clicking new and naming your, I'll just call it my North America shared chart, and you give it a description. Now, and I can't type, of course. Now, once you've created your chart of accounts, it's very easy just to go ahead and click on a new main account, and you're brought into the main account form. So now, because I've created a new kind of container for my chart of accounts, I need to go through and either import or create all my main accounts. So that's pretty standard. I can just go ahead and create maybe 2 examples here. And I'll create my ID and my name. And then we have different account types. So I'll go ahead and I'll just make this one an asset. And the account type is just as you would expect it of anyone that's ever worked in finance and accounting. It's going to drive certain properties of the account. And there's a lot of different fields here that I can create, but the main account category is one of the most important ones. So main account category, as I mentioned, is not a required field on a main account. So what we've seen is a lot of customers are not really setting that up because it's not required. But one of the key things that you get is if you start assigning your main account category to your accounts, you will get 16 financial reports out of the box that will work for you. Okay, so especially if you're a consultant or you're just starting implementation, please make note that that is a best practice to take advantage of 16 reports right out of the box. The other thing that the account categories are used for are the KPIs. So all of our KPIs are triggered off of the account category. So again, you want to make sure to put that as something you want to set up to take advantage of that functionality. So I'll go ahead and just choose an account category of cash. There's a lot of other fields I can set here to default an offset account, active from and to dates, and so on. The setup tab is going to focus more on what I like to call posting control. I'm not going to cover this in a lot of detail here, but if you have where you only want this account to be used for a specific currency or currencies or a specific user, there's some posting control you can also use in the setup tab. The last tab that I want to call out is the Management Reporter tab. I'm not going to talk a lot about this because Jill's going to cover it lately. For those of you on very early versions of AX 2012 or AX 2009, this tab is probably new to you. But there's some very important information here that Jill will cover that is for currency translation purposes when it comes to financial reporting. So we're going to kind of tie this all together by the end of the session. So we're actually going to be revisiting this field when Jill demos, and you'll kind of see why it's important and how everything is going to flow together from a currency translation perspective. All right, so now I've created an account. I'm actually just going to go to a shared chart of accounts just where you can see a more filled out list of main accounts. And one of the things I want to call out is the company overrides. Because I think that question's pretty common. The minute you have a shared setup, what about certain properties that are not relevant? So I'm in a shared chart of accounts now, which is already set up. And I'm going to go ahead and I'm going to click on Show the Level of Main Account Display as Companies. Once I do this, my drop-down list will show me any company that is using this shared chart of accounts. So it does limit that list. And you'll now notice I have a few additional tabs or fast tabs at the bottom of the report. So one you'll notice is financial dimensions, and we'll talk a little bit about that in the next section. But I think the key thing that we get asked about is the suspended field. So for some reason, if I did not want this Canadian bank account to ever be used in my company USMF, it's as easy as just coming into this company and marking it suspended. And that's going to prevent users from entering to this main account in USMF, as well as it's going to hide it from the list of accounts to select from. So it really has two purposes there, and it's a very common field to use. So you can still use a shared setup and then just use some of these additional fields to have specific properties per company. Now, once you create your chart of accounts, the place that you actually assign it is our ledger form. So again, underneath the setup under ledger, each company has a ledger today, and that's where you can assign the chart of accounts. So it's the first field that you see highlighted there. That's how you know which chart of accounts is assigned to which ledger. So I'm in a company called CTUS, Contoso US. It's using my shared chart of accounts. If I were to go to my Brazilian company, you would probably see that Brazil chart of accounts that was in our shared setup assigned to that company. So not too much detail there. Most of the fields are pretty self-explanatory for most people that have used any finance or accounting type fields before. So once you have that shared setup of main accounts, now it's time to talk about financial dimensions. And there are two types of financial dimensions in AX. We have what are called entity-backed dimensions, and we have custom dimensions. And the custom dimensions are where you need to define the dimension name and all the values. Okay? An entity-backed dimension is going to be backed by something, an entity that's already in AX. So think about vendor, customer, project. Those would be examples of entity-backed dimensions. Financial dimensions in AX 2012 are shared across all the ledgers. But likewise, similar to the main accounts, there are certain properties that you can override. So again, I'll show you an example of this where I have an event that I want to track, but none of my companies outside North America can participate in it. So I'm going to suspend that event for those companies outside North America, but keep it active for a short period of time within North America. Dimensions can also be used to create combinations of dimensions for balance calculations and reporting. There's a concept called totaling dimensions. I'm not going to spend a lot of time on that, but you can think about it almost as a grouping. So you have a group, and then you can define a range of dimensions as well. And then the last thing is defining the order for financial reporting. Okay? Because not every dimension is tracked on every transaction, there is a form to go to really track an all-up order when it comes to building out your financial reports. So I'll just briefly touch on that. So the scenario that we're going to now focus on is the ones that are highlighted here. We need a balance sheet by business unit. I need to make sure vendor and cost center are tracked with my expenses, and then everything else is business unit and department. So the dimensions that I need for my setup the dimensions that I'm going to create are going to be business unit, vendor, department, and cost center. You'll notice that in that last slide, I didn't say where we were going to analyze by region because we're going to cover that a little bit later. So I'm going to start again underneath the setup area in the general ledger page. And when I go to financial dimensions, and click on financial dimensions here, you'll see because as you heard Sri say probably in the AX session, we also have everything cooking because otherwise we'd be here forever. But you can see I already have business unit created and cost center created. But I'm going to show you how to create vendor, and I'm going to show you how to create event. So because I need to track vendor on my expenses, I'm going to click New and click on my drop-down for Use Values From. So the first option in the list is Custom Dimension. Again, that's the one where I need to create the dimension name and populate all the values. But if you look through the list, you'll see all what we call the entity-backed dimensions. And if I scroll down, you'll notice that vendor is one of them. So this means that when I'm in my AP, I don't need to track vendors there as well as dimensions. You can see that everything's just going to be backed from that vendor list as a financial dimension as well. So all I have to do is choose Use Values From, create a report column name, and when I go to financial dimension values, I already created this one, so let's give it another name. Okay, there's all my vendors. So nothing that I need to do, those values are getting populated. Okay? So that's an example of an entity-backed dimension. To create a custom dimension, again, I'm going to click on New. I'm going to choose Custom Dimension this time, and I'm going to call it Events, but I'm going to call it Events 2 because I already have part of it set up. So call it Events 2, give it a name in the report column. And when I go to financial dimension values, my list is going to be blank. So now this would be an example of where I'm responsible for coming into here and defining all my events. So if I were doing Convergence 2015, I can just type in those values. All right, so likewise with the companies, or the main account, we have a company override. And for Convergence 2015, I'm only going to limit it in my company for North America. So if I go ahead, I can go ahead and choose my company. And I'm going to choose my German company, because I'm not going to have them participate this year, so I just want to make sure they don't accidentally book anything to it. So I choose my German company, and I can go ahead and suspend it, so that no one accidentally books anything to that event. But for my US company, I want to make sure that they can only use this from probably about March until the end of March so that we don't get any late entries. So if I just did 3/1/2015 to 3/31/2015. Okay. All that's really going to do is just limit the time period at which I can use this dimension. So these are just a couple extra things that you can do from a company override perspective to really have control about when those values are used. You can also do this at the entity-backed dimension level as well.
Is that date based on transaction or posting?
I'm sorry?
Is that date based on transaction date or posting?
I believe it's at the transaction date, I think, on the line, but I'll have to test that for you to make sure. I can't remember off the top of my head. It'll definitely take questions at the end of the session, so we'll definitely have some time for that. Okay, so we've created a shared chart of accounts. We've created a couple different dimensions. Now we need to bring it all together so that you can really see the end-to-end. And that's where the 2012 account structures and advanced rules come into play. Okay? The account structures and rules can be used again by multiple ledgers. So we have a shared setup again to reduce that maintenance. One of the main things that the account structures and ledgers are going to do is provide that order for transaction entry. So not only do they limit what accounts and dimensions you post to, but they define an order of entry as well. So let's go ahead and talk about what we're going to cover. So I'm still on the same highlighted block of requirements. I need a balance sheet by business unit, nothing else. Okay, so I don't really want to track customer, vendor, anything additional with my balance sheet accounts. North America, again, I mentioned create vendor and customer are needed for expenses, and then all other revenues and expenses require business unit and department. So when I look at this, I really see that I have two main areas. I have a balance sheet area, and I have a revenue and expense area. So let's go ahead and create an account structure and advanced rule to really take care of these requirements for my business. So the first thing I'm going to do is go to my configure account structures. And this is where I'm going to build out the structure to meet my needs for Contoso North America. So I'm going to go ahead and create a new one. And I'm going to call it North America Balance Sheet. I'll just call it Demo for purposes now. Okay. You'll notice there is a checkbox to add main account. Main account is required. You certainly don't need to add it right off the bat, but I did go ahead and add my main account segment. Now my balance sheet only requires that I track business units. So what I'm going to do is click on Add Segment, and I'm going to have a list of all the dimensions that are available to me. And I'll click on Add Segment. Okay. Now, I want to limit the values for my balance sheet. So if I go ahead in the main account, and you'll notice there's this filter icon. When you click on that, there's what we call an expression builder that will help you kind of build out your rules if you're not really familiar with what the syntax is. And for those in the back, the first one says all values are allowed. This would mean that I can enter absolutely any main account that I want, but I need to limit it to my asset, liability, and equity accounts. So what I'm going to do is I'm going to click on specify which values are allowed. I'm going to choose is between and includes. And I know my asset begins with the number 1, and my equity accounts go all the way through my mid 3s. So I'm just going to go all the way out to 399,999. Okay. So now I'm defining what can happen when anytime I use an account in that range. And again, business unit is required, but I don't want to leave it blank. So when I click on this filter icon, when I'm not on a main account, you'll notice there's an additional field called allow blanks. I don't want to check that right now because I don't want them to leave it blank because I require a balance sheet by business unit. So I'm just going to hit cancel, and I'm just going to allow all business units to be allowed. Now, once you create an account structure, there is an activation process that goes through it. Just kind of make sure that everything, all the rules are in a line, nothing overlaps. I'm not going to run that process right now due to time. I do have one set up that's already active, but you do need to activate that structure before it can be used. So I'm going to go ahead, I'm going to create one more now, and I'm going to call it North America, and I'm going to call it, I'll just call it North America P&L Demo. And I'm going to go ahead and click OK. Okay, so this one has a few more rules. I want it to just be my revenue and expense accounts, but there are certain expense accounts that I need to track additional dimensions on. So this is where you have to do a little bit of thinking. If I only need to track cost center and vendor, on expenses, I certainly don't want those dimensions to apply to my revenue accounts because that wouldn't make any sense. And for ease of entry for my accountants, I certainly don't want them to have to just know that and tab over it and have to really think about it when they're doing heavy transaction entry. So what I'm going to do is I'm going to set up the dimensions that are common across those accounts, and I'm going to use an advanced rule to only bring in cost center and vendor when certain criteria is met during that transaction entry process. All right, so the first thing I'm going to do is I'm going to create a expression that allows me to enter all my revenue and expense accounts. And again, because my chart of accounts will change, I'm just going to start at my 4,000s or 400,000s and go all the way through 999s. Okay. So that'll take care of all my revenue and expense accounts across my system. Now, the segments that I need to add are business unit and department. So I'll first add business unit, and then I'll go ahead and add department. Okay, so one of the things that I showed you on the previous one was the allow blanks. So if I don't require them to enter something in, you can use this allow blanks. It's going to make sure that the dimension shows, but it's not going to require them to enter anything. And you'll notice when I add it, I don't know if you can see, there's a little checkbox with a green check mark in it. That means that allow blanks are allowed, and that just means that they don't need to actually enter anything, and when they post, it's not going to require them to have something entered. Okay, so I've got my main account, I've got business unit and department. Now I want to make sure for my expenses I add cost center and vendor. So I'm just going to close this form for now, and I'm going to go to my advanced rule. So you'll see here we have something called advanced rule structures, and this is where I want to bring in vendor and cost center. Okay, so I've created a name. I'm going to add segment, and I think I'm going to go with cost center first, and then I'll add segment vendor. So what I've done here is I've just created an additional structure, 2 dimensions. The order is cost center vendor. But now what I need to do is I need to really link this to the account structure that I just created so that it knows that when criteria hits, use these 2 dimensions and in that specific order. So again, there is an activation process that also is required for advanced rules. I'm not going to run it now. You probably see that I have one already created for demo purposes. So let's link these together. Let's go back to my account structures. I'm going to go through my North America. And for this purpose, I'm actually going to jump to my one that's final. So here's my account structure. I'm going to go ahead and put this in edit mode and go to my advanced rule. And what you'll notice is, again, at the top of this form, I've entered some criteria. So I added a where main account is between and includes 5,000 through 9,999. Those are my expense accounts. And so what this form is saying, and again, I already set it up, is anytime I enter a main account between that range, it's going to use the account structure that I just created called vendor and cost center. And so I assigned the vendor and cost center down here. And that's how it's going to know to use those additional dimensions so that, again, I don't have to enter those or know to skip over them when I'm doing any of my revenue accounts. Okay, so we've created a different account structure and advanced rule. As you can see in our demo setup, we have a lot of them. Okay, so I mean, you can get pretty granular if you need to. You can have different rules and structures by company. But how does this particular company know which structure to follow? That's going to go back to our ledger form. So if I go back to the ledger, this is where I signed that chart of accounts. You'll notice that I have North America balance sheet final, which I already created, and North America revenue and expense final assigned to as my account structures. So that combination is the rules that will be used for this company or this ledger when I do transaction entry. Okay? When you add these to the ledger form, it's going to do a validation process to make sure that none of the rules overlap. Okay, so I can't have a rule for my COGS in one structure and another rule for the same range of accounts in my second one. Of course, the system wouldn't know when to execute on. So it is going to validate overlapping criteria when you add it to this form, and it would provide a message if there is an issue with the overlapping accounts. All right, so now that I've got it assigned to the ledger, let's go ahead and take a look and see how this is working from an end user perspective. That's going to create a quick general journal. Quick might be the term that I shouldn't have used. I'm going to create a journal and wait. There it is. It's hiding. Oops. Oh, where'd it go? I can see it. There it is. Okay. So let's go ahead and create a general journal. I'm going to go to my lines, and I'm going to show you 2 different entries. I'm going to show you, first of all, a sales account where you will not see vendor and customer or cost center, and then I'll show you an expense account where you do. So it's going to come into play on this account field. So if I go ahead and choose an account for my drop-down, and I'll do 401-100, which is sales, and I click on this flyout, it's going to show you that main account, business unit, and department are the only dimensions that I have to enter. So this is using those rules that we just created, limiting me to only enter those dimensions because it's a sales account. Likewise, if I did a balance sheet account, you would just see business unit. Let's backspace through that, and let's go ahead and enter an expense account. So this is an expense account, and you'll notice it immediately changed, and now vendor and cost center are there. And my drop-down values are going to be limited based on the rules. I have the extra dimensions to track. And again, it's really taking some of the thought process out of the accountants to have to think about what they're entering. Okay, so we've created chart of accounts, we've created dimensions, we've kind of brought them all together from an account and transaction entry perspective. And now we have a few reporting needs. So you'll notice that the very last requirement that was covered on our organization structure, I did not create a region. And so one of the things that we really recommend is, the system only, it doesn't matter what you put the system if you can't get it out of the system, right? So if don't track 10 dimensions if you don't need to report on those or get data out of the system from some sort of analysis perspective. So the last thing I want to touch on is this last requirement. Contoso analyzes their business by region. I didn't create a region dimension. Okay? I'm able to drive my regions from either my company location or perhaps by a department or a business unit. So in my example, although this is how my corporate structure looks, I want to do a regional roll-up where my UK, France, and Germany all roll up and I report on them. Japan is in my APAC region, and then North America can stay as it is. But there's no reason to create a regional dimension. So I'm just going to touch on this briefly and show you an organization hierarchy. So I'm going to switch over to organization administration. And I'm going to click on organization hierarchies, and I'm going to click on regional, which is one that I've already created. Okay. So here's an example where I created an organization hierarchy by region. You can see I have a top unit there called region. And then I did Europe, APAC, and the Americas. And then I added those different companies beneath them. So I didn't need to create a regional dimension and start tracking that and make my users think about it. I was able to drive that by using my different locations and creating an organization hierarchy. Now, the reason I want to touch on this is because when I walked you through creating those account structures, if you have a very detailed setup like this, you can use the setup to drive the account structures. So if I maybe had cost centers rolling into departments, I can use that shared setup as well in my account structure so I don't need to duplicate that setup. The reason I bring it up, though, is there is a limitation that you need to make sure that you're aware of when you are doing your setup. And that limitation is that this can only have one parent. So the best example to think about is, let's just say you have IT as a cost center. But you have multiple locations. So I have IT in Europe, APAC, and in the Americas. Okay? If I have an IT dimension value and I add it underneath Europe, I can no longer add it under APAC or the Americas. Okay? And that's very important because there's only two ways you can really get around it. One is you have to create an IT Europe, an IT North America, and an IT APAC, which is really going to start inflating your dimension values if you think about it, if you have a lot of different cost centers. And the other way would be you could just have a single organization hierarchy. So I couldn't have this massive roll-up one here. I could just have a Europe one, which I add IT under. Then I could have a separate organization hierarchy where I add IT under APAC. Okay? So there are a bit of limitations there. They're great to use. Jill's going to touch on them from a reporting perspective. But there are a limitation that you need to just be very aware of so that you don't create more dimension values than needed. So with that, I am going to hand it over to Heidi. And she's going to talk about, now that you have all your financial setup, how you can go ahead and prepare for your consolidation using Dynamics AX.
Thanks, April. Good afternoon, everyone. Thanks for being here. Before I get started, I just wanted to ask how many of you are currently using consolidations in AX? A few of you. Great. And AX 2012 or 2009? Okay, excellent. So the focus of my demo today will be on the North America portion of the corporate hierarchy, and then Jill will end the session doing the all-up Contoso corporate financial reporting. So as we discussed, or as April had walked through, using a shared chart of accounts for North America, that would really simplify the consolidation process. I'm going to change it a little bit and actually have Contoso Mexico using a separate chart of accounts and show you how you can use some capability in AX to do the account mapping to a shared chart of accounts at the North America level. Okay. So some of the things that you'll want to consider are the steps as part of consolidation, and I'll walk through each of these, and they might not necessarily be in this order, is to process intercompany eliminations. So you can process intercompany eliminations as part of the consolidation process itself, and that's what I'll actually walk through. Or you could have a separate elimination company that you define in AX where you process those elimination rules, and then you can include that elimination company as a legal entity in your overall consolidation process. You can use account groups for account mapping, and that's what I was just alluding to, where you have different chart of accounts in use across the different companies that you're consolidating. You can make use of this capability. It was added in AX 2012 to map accounts from one chart to another. You can apply currency exchange rates for your currency translation adjustment entries, and we'll walk through the setup of those currency rates. And you can define the financial dimensions that you want to include in your corporate consolidation. So you'll have, again, you'll see a list of all the possible dimensions, and you can choose which ones to include for the aggregated data in the consolidation company. And as part of the consolidation process, you can choose percentage of ownership for non-controlling interests, for instance, as part of the consolidation process as well. So those are the different steps that I'm going to walk through. So I have actually started the process of the consolidation, and I have a company called Contoso North America, CNA, as you see here. I've defined some of the information for the ledger for Contoso North America, and I've created just a handful of accounts. I have my currency translation accounts that I had created. I've assigned my accounting and reporting currencies, as well as the default exchange rates that I want to use for both actuals and budgeting, because you can include budget amounts in your consolidation process if you choose to. I do have account structures listed here. This isn't necessarily a required step unless you are going to be performing eliminations within your consolidation company, because otherwise the data from your source companies comes into the consolidation company based on the dimensions you define as part of the consolidation process, and isn't necessarily dependent on having an account structure. The eliminations are, however, dependent on having an account structure, because you're actually posting those eliminations within the context of a consolidation company. So that's when it will require the account structures to be defined on your ledger. And in this case, I do have a chart of accounts that I've assigned called North America. Like I said, the only accounts that exist at this point in time, because I have not done a consolidation for this company yet, are the ones that I've manually created in that company for my currency translation. As part of the consolidation, any accounts that are in use in your source companies will be created in your chart of accounts that you have defined for your consolidation company. And I call that out as well, because if you are using multiple charts across the different source companies, they would all be inserted into the same chart of accounts upon consolidation if you're not performing the mapping using the consolidation account groups. That makes sense. So now that I have my ledger defined, I am going to just look at we'll look at the currency exchange rates we have defined, and I'm using some data from 2014 where I have transactions actually created, and I have my currency exchange rates defined for Mexican pesos to US dollars for the time period that I'm going to be performing the consolidation. I have two, in the year 2004, I have two different exchange rates defined, one for January, one for February. And I've assigned that as the default on my ledger, and I'll have the option of choosing the specific exchange rate type that I want to use during the consolidation process. So I have my currency rates defined. I'm also going to define my consolidation account groups. So in this case, I have just two different groups defined. I have German and Mexican. I'm really focusing on the Mexican account groups at this point in time. So I'm just giving this account group a name, and then I can reference those account groups in the additional consolidation accounts. So here I can see my list of all the chart of accounts I have defined, and I'm working with the Mexico chart of accounts, because that's the one I'm going to map. And here you can see all of the accounts I have, and there's only a handful that I've taken the time to map from my Mexico chart of accounts. And I'm specifying the consolidation account I want to use. So when I perform the consolidation process, any balances that exist on these accounts will actually be created in the consolidation company using the consolidation account number. And these numbers can come from my shared or my North American chart of accounts. So this is important if you're dealing with organizations that can't share a chart of accounts due to regulatory requirements in specific countries. For example, in France, there's statutory chart of account requirements. So you can use that statutory chart of accounts for that organization, but then roll them into different accounts during the consolidation process using the consolidation account group. One thing I did want to call out, actually, I jumped ahead of myself, is when you're actually defining the legal entity for the consolidation company, there's two important checkboxes. One is used for financial consolidation process. The other is used for financial elimination process. Obviously, the second one is optional. The first one, it needs to be marked on the legal entity as you create it. Otherwise, when you attempt to access the consolidation functions in AX, you'll receive a message telling you to go mark this checkbox. And what that does is actually good or bad. We've gotten feedback both positive and negative. It does prevent you from entering in manual transactions in that consolidation company. So I know we have received feedback that you would like that option to be able to perform adjustments in that consolidation company, so we hear that feedback. Right now, you are limited that when that checkbox is marked, the only types of postings that you can create in a consolidation company is for the elimination processes, and then obviously any currency revaluation that you might perform in that consolidation company, but no manual adjustments can occur in that company. So now I'm just going to step through the actual consolidation process, and I'll call out before doing so that I have an elimination rule defined. So under the setup and posting, you'll see a ledger elimination rule. And I've created a rule here to eliminate transactions, my intercompany receivable and payable that is occurring between my U.S. organization and my Mexican organization. So when I go into the lines area here, you can see I've just defined the source accounts that I want to use as part of the elimination processing. So this represents the intercompany receivable and intercompany payable. And in this case, I have the method set to net change. So whatever balance these accounts hold during the when I process the elimination rule, it will do either the debit or credit for the opposite balance to bring it to zero. And you'll notice I only have two accounts here because even though in my Mexican chart of accounts I'm using different accounts for my intercompany receivable and payable through that consolidation account group in the mapping, I have those accounts mapped to these two accounts that are also in use in my U.S. chart of accounts. The other option you have here is a fixed amount as well. So with that selection or that rule, you would actually plug in the amount as the fixed amount that you want the transaction to be created for your eliminations. Oh, and it cleared it out on me. Oh, dang it. Oh. Okay. So now I'm going to go into the consolidation area, and there are options to do import and export. I'm not really going to cover these today. I'm going to focus on the consolidation online. Is anyone using the import-export? No, that's probably a good thing. But they are there. In the event that you do have separate AX instances that aren't connected, you can do an export from one company and import it into another, or export from one instance and import to another instance. But there's a better way to do that, and Jill's going to cover that using Management Reporter. So I'm going to go through the Consolidate Online, and as you can see, when you go through this process, it does hold your previous values so that you don't have to go through and set it up each time. It should just be requiring a date change for another period, or if you need to make any changes due to changes in your organization, additional legal entities, and so on. But here I've just selected my account range, and I've marked to use the consolidation account. And when I mark that, you actually have the option of using a consolidation account group, like I showed you that I defined all the mapping for from the Mexican chart of accounts, or you can have it pull from the main account specifically. So as part of the main account setup, you can also specify a consolidation account directly on your main account, so you can use either option during consolidations. Since I selected the consolidation account group, then I specify which group to use. And you recall I had two set up, and I'm working with the Mexican consolidation account group. I choose my consolidation period, determine if I want to bring in actuals or budget amounts. Rebuilding the balances during the consolidation process. So we have dimension sets, as you're probably familiar with in AX, and you can, which are used to build reports or your trial balance. And during the consolidation process, you can mark that checkbox to have those balances be rebuilt as part of the process instead of doing that post-consolidation. If you're bringing in budget amounts, you need to specify the budget model and the budget rate type to use for currency translation during the consolidation process. On the Financial Dimensions tab, this is where you can do your mapping of the ordering of the dimensions, how you want them to be created in your consolidation company. So main account is a given. You don't have to specify that. But for your additional accounts, you specify the order. So in this case, I have the department dimension as the first segment after main account, followed by cost center. And then I have mapped my legal entity to be used as a financial dimension essentially during that consolidation process. So that'll be added to the third segment. So we'll see company USMF, in my case, is the U.S. manufacturing and Mexican manufacturing. Those company ID will be added to the account number in the consolidation company. And here's where I specified the different legal entities and the percentage of ownership of those legal entities to be included in the consolidation. I can give a description for the process. Under elimination is where I can specify my elimination rule to use. And I can determine whether I want it during the process for just a proposal to be created. So essentially a journal in a non-posted state would be created for me to review ahead of processing. Or I can just have it post automatically during the consolidation process. I'll leave that to proposal so we can take a look at that. And I'll change my posting date. And if I wanted to specify a reason code for this transaction, I could do that as well. Then for currency translation, I have a number of different rows in here, but this is to specify the currency exchange rate type and the currency exchange rate date to use for your range of accounts. So in this case, I have all but my fixed assets from my balance sheet using the consolidation date and the default exchange rate. You can see for my P&L accounts, I'm using average, and here are my range of assets as well using transaction date. So those different methods will be applied during the consolidation process. I can run this in batch if I choose to, so you can set this to run at a scheduled point in time. I'm just going to go ahead and process this now. And the consolidation process is one that you can repeat. So if you run the consolidation and you're looking at the entries made, or maybe there wasn't something quite right with the percent ownership, et cetera, you can remove the transactions from the consolidation process and rerun it. So this is just notifying me that some of my accounts weren't mapped. That's fine. And so there's a couple different areas. Under inquiries, I have my consolidation inquiry. You can see I've run this a couple of times. But if I go to the most recent, which is today, I'll have transactions by legal entity. I can see the ones that were consolidated, and here are all my entries from my U.S. organization using the dimension structure that I specified during the consolidation process. And then here are the entries from my Mexican legal entity. And you recall the account numbers were very different. They were additional digits, but using the consolidation account group, it's mapped the accounts to what I specified and correlate to the same accounts that are used in the U.S. organization. So if we want to, before looking at the trial balance, let's look at our elimination journal that was created as well. So here I have a journal entry created. I can go under lines to see the detail, and basically this is just going to net. I had one entry that I had created for illustration purposes where there was an intercompany transaction between the U.S. organization and the Mexican organization. And you can see one line of this is in Mexican pesos. The other line is in U.S. dollars, so it's backing out the entry that was originally made in the separate legal entities as part of that elimination rule. And then I'll go ahead and post this, and so we should see a net value of 0 or on those accounts, the intercompany receivable in this case. You can also run the elimination outside of the consolidation process, just so you're aware. If you go into the elimination journal, and if I create a new one, there's an option here to create a proposal. So under the lines, the journal lines, you'll see proposals and elimination proposal. And then you can just specify the information in this form as well. So I'm choosing my source company, which is my consolidation company, my rule. I can specify the range, my posting date, and there's not any records that match this criteria at this point because I had my range of information today. So that's another way you can also post or process the eliminations outside of the consolidation process. So let's just take a look at the trial balance. And you'll see specifically I wanted to highlight the intercompany receivable here where I had a debit of 1,000 and the credit of 1,000 happened as part of that elimination process or the journal that I had just posted. So for now, say so that completes the consolidation for January, and now we'll pretend that a month has gone by and there's been that currency translation adjustment that has occurred. I had a different currency exchange rate set up for the month of February of 2004. So you can process your foreign currency revaluation in a consolidation company as well. So in this particular example, I'm just going to walk through just using one particular account, my cash account, and I can set my date range for the amounts to be included for that revaluation process, my from and to currency, and then I can just go ahead and process my currency revaluation. Give me one moment. So now that's evaluating the transactions that were posted to that cash account and revaluing based on the exchange rate that's in place on February 1st. So if I go back to that trial balance and look at my cash account, nothing happened. I'm sorry, I was having problems with my fiscal calendar. I just want to maybe recalculate these. An important point, too, because I've run into this, and so I'll call it out, is in order for an account to be included in the foreign currency revaluation, you must have this checkbox marked on the main account. So if you're running into a situation like I just was where you're not seeing amounts, make sure this checkbox on the main account is marked. We'll give it one more shot. Nope, that's not cooperating with me. So what you should see when not under pressure is you would have a transaction for the net balance, or excuse me, let me go back to the cash account. So my $13,000 would be revalued at the new exchange rate. So I'd still have my original entry, and then my adjustment entry would be made on February 28th for the difference for the currency revaluation. And you'll see multiple entries. Just so you're aware, you'll see an entry for both your functional or reporting accounting currency as well as your reporting currency. So it might look like you'll have 4 lines in the voucher. 2 of them are specifically for your reporting currency if you have that defined. And then the last step here is just if we're going to produce our financial statement for our consolidation company. I'm using Management Reporter. This is just one of the default reports that come out of the box, one of the 16 that April was referring to. So in this case, since I already have all my data consolidated, I can just run an income statement for my consolidation company, and all the amounts are, as we just saw in AX, already consolidated, so I only have to select one company when generating my income statement. But Jill's going to walk through how we can extend this even further by bringing in additional companies outside of AX and that were not part of my North America hierarchy. So turn it over to Jill. Thank you. Actually, let me fast forward. One more slide just to cover, just some additional considerations. I already mentioned this first one, a separate legal entity must be defined for consolidation purposes. No transaction entry other than the eliminations currency translation is allowed in the consolidation company. In some cases, it might be easier for you to create an elimination company that's independent of your consolidation company for just having those eliminations separate from all your other consolidation data. So that is a consideration that I've heard some other customers are using. And then you can achieve multiple levels of consolidation with currency translation at each level. We just looked at one, but then that Contoso North America, in my example, could also be a source company in another consolidation. So you could do multiple levels of consolidation with currency translation at each level. So now I'll turn it over to Jill.
So now that April's walked through creating the chart of accounts, Heidi's shown an option to actually do the consolidation in AX. What we're going to do is show the consolidation in Management Reporter. And so we kind of go back to that first slide that April showed that had our hierarchy here and where all of this data is coming from. So we've got France up at the top that's on an instance, which is where we're rolling everything up to, and then each of these other instances. We aren't worrying about this process since Heidi already did that in AX. We're just going to include that North America company as part of our overall roll-up. And the other thing to note here is that Contoso Japan actually isn't in AX. It's outside of our Dynamics ERP. It also isn't within either GP or SL as well. So it's outside of the Dynamics ERP, but we can still include that information. Each one of these also has a different chart of accounts. So we need to bring all those together into a single report in Management Reporter. The steps to go through that, and it looks like there are a lot here, but once you get into it, it really isn't that bad. We've got our Excel file is where our information for our Japan company is coming from. So as long as you can get the data into Excel, we can pull it into Management Reporter. It can be a trial balance out of whatever that other system is, whatever kind of data that you can extract that you can get out of it. If we can get it into Excel, we can pull it in. We're going to create multiple link columns in our row definition. So within Management Reporter, there's a financial dimensions link that links us back into AX. We're going to create multiple of those, one for each of the unique charts. And it's not necessarily company, it's based on the chart. So every unique chart would have a different link to financial dimension column. Then we're going to map those accounts and create cell references to our Excel spreadsheet. We're going to add a column to pull in our column definition to pull in that worksheet information. We'll select our row definition, and then also that gets us to how we map actually our companies to each one of those financial dimension links in the row definition, as well as our spreadsheet. So back in Management Reporter, we'll go ahead and take a look at the final report first, and then backtrack into how it was built. So I'm just going to open up my corporate consolidation here. And in my example, I created an IFRS type of layout for my report. Just keep in mind that the layout of the row definition can be any way that you would like it to be. It really is a matter of just mapping each of those unique chart of accounts to that different row description in your row definition. So you can see here I've got a single view. I'm rolling everything up. If I look at my reporting tree, this is where you can see now I have Contoso Corporate. There's my UK, Germany, Japan, and North America are each of the units within my reporting tree. If I'd like to see information about each one of those units, I can select them and have that individual unit roll up. That's one of the things that's great about Management Reporter. Since these are all in Dynamics AX, I can drill down into each one of the transactions for the individual companies from that consolidated total if I'd like. So in Report Designer, the majority of the mapping, as I mentioned, happens in my row definition. So that's where I'm going to start. So if I open up my row definition from my report definition here, sorry, let me change my company so that we can see each of our dimensions there. Actually look at my USMF company in this example, just so that I can see my dimensions, my accounts. There we go. So what you can see here in my column B is my description column. And really this, again, can be anything that you'd like it to be. One of the things that we've worked on with some of the other local teams within Microsoft is creating a statutory chart. So if the government has a specific chart that needs to be used, you could actually update your description column, so column B, to match whatever that statutory chart is, and then map each one of the unique charts that you have in AX to that specific description. So that description is just something that I have typed in. It can be any descriptions that you want, so just keep that in mind. It could even be actual account numbers, including descriptions as well, so that you can see how things are being mapped. The key for this particular scenario, though, is I have multiple link columns here. So you can see I've got J through N are my link to financial dimension columns. And as I mentioned, each one of these is a link to the unique chart. So you can see I've got corporate, UK, Germany. We'll talk about the worksheet here in a minute for Japan, and then North America. In order to create a new link to financial dimensions column, by default, when you create a new row definition, you get one. You can double click in the header area to open that up, or use the row links option up here in the toolbar. Will also open that same dialog. And in order to create a new one, you just select the new button. and then choose the link type. So you can see here we've got financial dimensions, external worksheet. Those are the two that we're focusing on in this example. So financial dimensions, again, is going to go back to my ERP. It's going to go back into AX. The external worksheet is going to go to an external worksheet, so that spreadsheet that I've gotten, that extract from my other system to include that information. And then there's also some other options related to combining financial dimensions plus worksheet into a single column. But for our example, we're going to focus on financial dimensions and external worksheet. Go ahead and delete that out of there. You can see here that I've created one for each of my unique charts. I've given it a name, and I've also described it so I know what company it is that I'm mapping to. Once I have those created, it's simply a matter of mapping each one of my main accounts to that specific column. So one thing to keep in mind here is depending on the company that you're in, that's what the list will populate. So if I actually go ahead and hit F3 to open up my dialog, my dimensions dialog, this list is pulling in from the company I'm currently logged into. So USMF is what I'm logged into. You can see that down in the status bar. So those are the list of accounts that I will see. So what I'd want to do is create my links and then make sure I'm in the appropriate company as I'm mapping, unless you know the other charts by heart and you can just type them in. You can do that as well. You can copy and paste them in from another row definition or from Excel, whatever you need to do to get those in there. But that's just something to keep in mind when you're looking at creating those different link columns. So I'm mapping each one of my rows for each one of my unique chart of accounts. When it comes to the Excel piece, so you can see here that the Japan company is again pulling from an external worksheet. So I've got Contoso Japan there. And I have just a cell reference that says C125. My extract, my data extract, the Excel file that I have, if I go ahead and open that up, is simply a trial balance list. So you can see here I've got my descriptions are all coming in Japanese, and I know that this one is going to be 125, so I can scroll up, but I can then just reference those cells based on what row I have selected in my row definition. So I've got, in my case, I have C125, and so on going down for each of these accounts. You don't have to hard code in or update your row definition for each month. There is a function within Management Reporter. If you are continually updating the same workbook, for example, if this is January and you add the February column to your trial balance and you don't want to have to go in and update your cell references, you can use a function called column period offset. And it's simply a matter of doing the slash and then CPO. And what that will do is every time that you generate this, it will look to the next column for data. So you can say, for example, I know that column C is where the data starts. You would actually do B125 slash CPO, and it would just count over. So for period 1, it would go for one column. Period 2, it would go to the next column, and so on. So you don't actually have to go in and retype in those cell references each time that you need to run the consolidation. Once I have that mapped, I've got each one of my unique charts mapped. I've got my external worksheet cell references mapped. I need to go in and add a worksheet column to my column definition to pull that data in. Now, if you remember in the report itself, I actually just had a single column worth of data. And that's because I have a calculated column that's totaling those two up, and I've decided to do non-printing on each of those detail columns. So I've got a column for FD, which is financial data, financial dimensions, so that's going to be pulling in from AX for all of those companies. And then I have this worksheet column that's going to pull in from that external worksheet. And then I simply have a calculation that's adding those two together just to give me that single column. There are multiple ways that you could do this. If you wanted to see them side by side, you could have a separate column for each of the companies that's in the report, including the one from Excel, or to see it laid out side by side. So whichever way that you'd like to be able to see that consolidation, it's really up to you on how you want to do that. In my example, I decided I just wanted a single column, so I made the other two non-printing and just used that calculated column. My reporting tree is where I kind of pull all of that together. So in my reporting tree, you can see I've got my Contoso corporate summary unit, and then I have a company defined for each of my individual locations here. So I've got the Contoso UK, Germany, Japan, and North America. I have my row definition. So this is the row definition that I'm going to use that has all of my link to financial dimension columns in it. Once I add that, then I can take a look at some of the other columns here. So column F, G, H, and I are the next things that I need to focus on. For my companies that are in AX, I want to choose the appropriate financial dimensions column. So you can see in the financial dimensions link for UK, I have the appropriate link defined, and it knows when I actually open up the drop down here to only include the financial dimension links here. Okay, and so that's where naming it is kind of handy, so that you know that FD2 is actually for UK and so on. But you'll notice that on line 4 here, there isn't anything in the financial dimensions link, and that was my company that I'm pulling, Japan, that I'm pulling data in from my worksheet. And so in this case, it's a worksheet link instead. And again, it knows that there's only one worksheet link. And then you just path out to where that workbook is. So in this case, I've pathed out to my Excel spreadsheet. You can have multiple worksheets in that workbook. By default, it will pull the first. I showed an example here of actually just typing in that worksheet name. So if you've got multiple worksheets and you know in a single workbook, you can specify the name here. So that's how we've mapped together each of those linked to financial dimension columns, the external worksheet column, to know what data is going to be pulled across for each one of our companies when we run our consolidation. The last step is this little checkbox here that says use row definition from reporting tree. If this is unselected, what it will do is it will look to the row definition and use that first financial dimension link column, and that's it. Okay? By checking this box, it's telling Management Reporter, when this report is generated, go look at the reporting tree, and for each one of the units in the reporting tree, pull the appropriate data for that link. So for UK, for example, use FD to Contoso UK. For Japan, use the external worksheet link to pull that into that report. And really, that's how you would go about mapping those things together to create that consolidated view of the report, with the final result being, go back to our summary unit here, this single column, all of those unique charts plus data from Excel all pulling into a single report to get that consolidated view. So some additional options, as Heidi had mentioned, there's the consolidation account groups and that consolidation company in AX. North America was that consolidation company, so like Heidi showed, you can just generate a report out of Management Reporter for that consolidation company and have that consolidated total as well. And then also reading that other data for companies from that workbook that we already showed. The next piece related to Management Reporter is really about reporting currencies and being able to see the appropriate reporting currency based on the exchange rates that are set up in AX and automatically pulling those into Management Reporter. And then some different ways that you can display those currencies in the Management Reporter web viewer. I'm going to switch the report that we're going to look at here just to illustrate this a little bit better. So from within the web viewer, you notice down in the toolbar, there's a currency button. And when I select that, it gives me a list of all of my reporting currencies. And what I can do is select one of these reporting currencies and choose to view that in a different currency. So if I select Euro, for example, you can see now that I'm viewing this report for Euro. My currency symbol has updated to Euro. This entire report now is just being displayed in Euro. And it's doing that translation based on what's been set up in AX. So if I take a look at my shared chart of accounts here and just open up one of my accounts, as April had talked about, there's the Management Reporter FAST tab down at the bottom. And this is where you set your exchange rate type and then your currency translation type. And this is what Management Reporter is using to translate those amounts into those appropriate currencies. So whatever is set up in AX is what Management Reporter is going to use when it does that currency translation. You can see that it's based off of the company. So if I go back into Report Designer and look at my company name, you can see that underneath the currency information, I've got this values will be displayed by default in USD. When I flipped that currency in the viewer, you can either choose to have it translate that at the time that you're viewing it, or you can do it up front by having this include all of the reporting currencies when it's generated at the first time. So it really depends on how you want that processing to happen, either at the time the report is generated or at the time that you're actually viewing that report. There may be situations where you want to see currencies perhaps side by side. So if I take a look at a different type of report, oh, that one wasn't generated. Sorry about that. What you can do to get those to display side by side is in my currency display, this will list all of the currencies that are available. So I can, if I have a currency display set in my column definition and I flip the currency, that column will always stay at whatever's been defined in the column definition. So you can have things side by side that would flip if you'd like to have them displayed side by side. You want to see Canadian dollars and US dollars and Great British pounds all in separate columns. You can do that by using that currency display. And as I mentioned, each time that currency is flipped in the viewer, what you can do is have the currency symbol as well as any ISO codes are updated at the same time based on auto text if you're using currency code on certain in your column definition or in your report definition, as well as using that currency symbol like we saw the euro flip to the US dollar sign flip to the euro sign. So as I mentioned, selecting that currency display in the column definition, and again, you can use that consolidation company for translation and then report on that company as well. So kind of to bring everything together here of what we took a look at today, planning out your chart of accounts and dimensions to make it easier from a reporting standpoint, as well as meeting those specific business needs. Determine how those accounts and dimensions impact in reporting. And there are two different ways that you can use consolidations and do consolidations. Either use that Dynamics AX 2012 for consolidations, use Management Reporter, or use them both together like we showed today by having one company be a consolidated company and the rest of them be non-consolidated companies. And again, across instances of AX, we were pulling in information from outside of AX. We can consolidate multiple Dynamics ERPs together as well. So really and versions of AX as well to get that consolidated view. A lot of times we're hearing from customers that they have some companies are on AX 2009, some on 2012 R2, some on 2012 CU8, and so forth. And all of that information can be brought up into a consolidated total or consolidated view. From a resource perspective, the deck will be, this PowerPoint deck along with the links will be available in virtual convergence so you can get to this information. But there's a planning a chart of your accounts blog series that's available, shared financial data management white paper, the implementing the account and financial dimension framework. All of this information is available for you to help you determine what the best approach is for you, including consolidations and then also the financial reporting blog. With that, please submit your evaluations. We have time for some questions, so I'll ask Heidi and April to come back up, and we'll be happy to take your questions. Let us know what you liked, what you didn't like, what we could do to improve this session, and thank you very much. And if you have a question, if you could use, well, it's kind of small in here, but the microphone helps.
I know on the chart of accounts, the suspended checkbox makes it makes that account invisible to the companies using it. Does it work the same way with financial dimensions?
Can you hear me? Okay. Yes, the suspended checkbox should work the same as the main account as it does with the financial dimensions, as far as restricting what you can see in the lookup.
Awesome. Thank you.
And I think there was a question during the session that I was like, I'll answer later. Was it Dale who answered it? I'm not sure. So if you did ask that question, I will follow up with you if you just want to bring me your business card. I just wasn't able to think of the answer on the spot. So, so I think he left, but if you did have that question, let me know and I'll try to follow up with, yeah. If the Yeah, the question was on the active from and to if it was the posting or transaction date. I honestly can't remember off the top of my head right now, so if you can just give me your call, I'll just test it quickly and follow up with you. Thanks.
Yeah. Oh. The CU with the dimensions, was that CU 7? I think,
Yeah.
Just for the follow-up on the dimensions, not showing up in the lookup, but that, I believe, was CU 7 when that came in. 2012 R2 CU 7, or R3 would have it as well. Just if you're using some earlier versions, you won't see that. Okay.
Have you seen customers have issues with bringing in too many dimensions into the general ledger? Like if you wanted vendor and you wanted project and you wanted like item from a performance perspective?
I don't know that we've seen specific issues as far as just general usage in the system when bringing in those entities. There is some considerations, for instance, when using Management Reporter as well, because all those transactions are then moving into a data mart for reporting purposes. And so depending on the number of vendors you have, I guess, or projects would be it depends on how many. So if you're talking millions of vendors, it could have an impact.
We have thousands of projects and hundreds of vendors?
Oh, that should, yeah.
One additional comment on that. When you create the account structures, though, you want to try to use ranges and everything as often as you can, because if you get very granular and almost build it out line by line like a fully qualified chart of account, that's going to perform badly. It definitely wants you to try to be smart about it and do ranges. So try to do the ranges and groups as much as you can in the account structures, because that is something that is more optimized for that type of setup.
Okay, thank you.
From an elimination standpoint, you use main account.
Mm-hmm.
Can you use a financial dimension for elimination as well?
Yeah, in the elimination rules, I had the source set to dimension. You can also set, main account. You can also set source dimensions, and the same on the offset as well.
Okay.
We also have a lot of customers that just use a dimension called inner unit for that purpose, and I mean, I've heard just tons of customers doing that. So yeah, it's absolutely very common practice.
Good. Thank you.
I think it was on the.
Go ahead. No.
I think on the main account, the currency revaluation checkbox. What happens if that's not checked? The account just won't be included in the revaluation process. Okay. Yep. Did everyone hear the question? If the currency revaluation checkbox is not marked on the main account, what happens? And it will just be overlooked, excluded in the revaluation process.
So if you have a need to redo the consolidation in AX, do you need to delete for the same period, do you need to delete the existing consolidation, or if you just rerun it, will it automatically delete it? Yeah, so the question was, do you have to, I'm repeating because I'm so used to repeating. You all heard the question. Actually, when you rerun the consolidation process, it will delete your prior consolidation. So there's no need to actually. Thank you. April's clarifying it will not delete revaluations, though. Okay. So be cautious of that. But otherwise, when you rerun, it will. Okay. Not delta. Now, if there are transactions that need to be revalued that come back in and through the new consolidation, will those also be revalued, or does that make sense?
What? I'm not sure.
So if you bring the transactions back in, that
Well, I mean, because you're doing the
new
consolidation,
balance
but there may be.
you'd want to rerun the revaluation.
You want to rerun the
It's
revaluation
just that the
still.
original revaluation never gets deleted.
Right. Okay.
Yep.
That makes sense. Thanks.
I had a question about online consolidations. So our what do you call it? Consultants. That's the word. A word. They have us, so we consolidate and then we revalue to get like the, at the spot rate. And our technical accountant is saying that, telling us that we should have all assets and liabilities at spot on the consolidated entity. But if we're using the foreign currency revaluation process for that, we can't, on the base companies, we need to uninclude, fixed assets, for example, and then on the consolidated entity, he wants to do it a different way. Is there anything we can do? Does that make sense? We want to use it for the translation process and the foreign currency on the originating entity, but with the same account, we want to do it one way for foreign currency revaluation, another way for the translation process.
I think I understand what you're asking, but when Heidi showed the tab of currency translation on the consolidation, and she had ranges of accounts, and when you define a range of accounts, you could define that specific range and choose a different rate at the bottom of that form.
Yeah.
So you could isolate it that way, and then.
But they were saying that we need to, on the consolidated entity, revalue prior existing transactions because that came over at last month's rate, and that's where we're running into the issue. It's not this month's transactions are fine. It's last month's balance sheet. That's.
Yeah. So then the revaluation in the consolidation company should take care of that.
But it's like for the fixed assets on the local entity company.
Yeah.
We don't want to revalue that, but we do want to revalue that fixed asset account on the consolidation company.
So that property being.
Oh, I see what you're saying.
So it's the same technical AX process, but different accounting processes.
So today you would have to have that option marked on the main account, but then exclude it from the range when you run the revaluation. So you can specify a range of accounts for that revaluation process. So you would not include those accounts in your source company, but include it in your consolidation company. But it does leave room for
user error.
Yeah.
Okay.
Yeah.
Thanks.
But feedback though to.
Okay.
Thank you for the scenario.
Yeah.
Thanks.
The only other option I can think of, and this is probably not pretty either, is when Heidi mentioned that if you don't have a chart of accounts or your accounts defined for your consolidation company, it will copy them all in. You could use a separate chart of accounts for the consolidation company so that you could do that override at that level. And the first time you run it, all accounts would get copied in to prevent dual setup. So that'd be kind of a hack way to do it. But it's an option. That way you could have that separation. So something to think about.
Okay. And then if somebody updated the local entity chart of accounts, but they didn't update that, what would happen during the consolidation process? How would that fall out?
As long as the account number, it looks for a match with the account number, it doesn't change any of the properties on the main account.
Okay, so it'll just fall out and say I can't complete
It's already there.
because it doesn't exist?
So if
if they add on the local, but they didn't synchronize them up again?
It would get created next time you ran the consolidation.
Right.
Oh, it would create that on the main.
You'd have to go in and mark.
Gotcha.
Clear the checkbox.
Cool. Thank you.
So that would work.
Sorry. When you perform a consolidation within AX, the items are grouped, I think, by financial dimension, by date, and an entry is put in the consolidation company when you do an inquiry, right?
The transactions are aggregated by daily balances, so you'll see an entry for daily balances across account, unique combinations of segments.
So if I do use the management reporter to do a consolidation report, am I able to drill down deep into the source transaction of the underlying company, or is it possible?
It'll go back to the consolidation company inquiry, but just like in AX, I mean, it's the drill through from management reporter is just invoking a AX inquiry. So we'll open up the voucher inquiry in the consolidation company. We need capability in AX to drill back to to the originating company.
But if I bypass using the consolidation within AX and do
sorry.
as Jill mentioned,
Sorry.
so because which is something that we have never tried. So but from what you explained yesterday and today, so it's possible that if we perform a consolidation using management report, I may be able to drill deep into the source transaction.
Yes, you can start from the consolidated total and pick a company and drill all the way back to the transactions and or all the way back into AX.
Okay, thank you.
That's one of the benefits.
Thank you.
Thank you, everyone.